Hi everyone, I'm Jordan with Citywide Mortgage Services, your personal mortgage planner. This is no April Fool's joke. Housing affordability has deteriorated to its worst level in 31 years, according to RBC Economics, pushing out many new potential homeowners and especially first-time buyers. But with rents going up as well, homeownership is still a worthy goal as you build equity for yourself, and we all still need a place to live, and I'm a firm believer in the benefits of home ownership. For new homeowners and those currently looking to buy a home though, it's becoming more important to understand the implications of the rising rate environment we are in, the pros and cons of fixed versus variable rates, and how to choose what is best for you with sound and knowledgeable advice. So I want to speak directly to three main points here and how they are intertwined. Number one, rising fixed and variable mortgage rates. Number two, the increase in the stress test, also known as the qualifying rate. And number three, what this means for you if you have a current rate hold in place. First, fixed rates in some cases have broken the 4% barrier, and while variable rates currently remain about half the price, we know that prime rate will be increasing potentially fast and hard, and the discount to prime that you get with the variable is diminishing. A variable rate mortgage though is still a great option if you have a decent discount to prime, because even with aggressive rate hikes, your variable rate could very likely still be below that of the current fixed rates, saving you on your monthly mortgage payment and the overall interest you paid over the term of your mortgage. So for those also asking if they should lock in their variable rate mortgage, my answer still may be no. There are ways to mitigate the expected rise in the variable rate and the prime rate, and I'd be happy to go over that with you and discuss a strategy that works. Next, remember the stress test. It has two sides. When I do your mortgage qualification, I need to use the greater of either the qualifying rate of 5.25% or the contract rate plus 2%. With 5-year fixed rates between 3.89% and 4.14%, that means using a stress test of 5.89 to 6.14%. But the variable stress test is still 5.25%. So buyers will qualify for more mortgage by choosing a variable rate, and with the crazy real estate market that we're in, this is what so many people are after. So the safety net that the government was trying to achieve has basically vanished because borrowers are incentivized to take that variable rate option. Ultimately, the choice between the fixed and the variable rate is up to you, but don't let fear and misinformation drive your decision. And this brings me to the final point, very important for new home buyers who currently have rate holds in place and how you need to be incredibly careful moving forward. If your rate hold was put in place a couple of weeks ago, it was most likely qualified at the stress tested rate of 5.25%. Now, if your rate hold expires or your purchase closes after your rate hold ends and you need to requalify, especially if you are at the top of your budget, you're going to need to reconfirm your new qualification amount. If you are wanting a fixed rate, the higher qualifying rate will mean you qualify for less mortgage. And it's also possible that the benchmark qualifying rate that's going to be used with the variable rate mortgages is also going to be increasing. So be very careful moving forward if you are purchasing a home, and be sure to discuss your budget with me or your mortgage professional to be sure you are on track. Thanks so much for taking the time to watch, everyone. I look forward to seeing you here again soon.